Hello and welcome to this Experian Open Banking event. We are really pleased to be able to share some insights with you today. My name is Francesco Nazari and I'm responsible for developing Experian's open banking services in Europe, Middle East and Africa. We're always finding that many businesses are still trying to navigate open banking in a way that allows them to best take advantage of the opportunities it can unlock. So today's webinar is about understanding current perspectives and investment plans and the opportunities and challenges that businesses like yours are facing as they look to exploit open banking. We have surveyed over 100 leading clients across Spain, Italy, Germany, Norway, and Denmark to understand their views on open banking. The result of which is a new white paper report that we developed to explore the findings and the implication for businesses. In our first session today, Paul will take us through these report findings, offering insights into the business priorities with a focus on how transactional data from open banking can uplift performance. Then we'll hear from one of our most innovative clients to get a specific perspective on open banking and what it means for their business. And finally, in the last session, we will hear from our local market experts to discuss open banking in our research markets, where we'll focus on particular insights relevant to different regions. So without further ado, I will hand over to Paul. I hope the insights today prove useful to you as you look to take advantage of open banking potentials for your business.
Hello everyone and welcome. My name is Paul Heaton, Head of Proposition Marketing for Experian in EMEA. Today I'm going to walk you through our most recent open banking research that we commissioned in May of this year. We conducted a survey involving more than 100 clients in 5 key European markets across financial services, telecommunications, insurance and e-commerce sectors, with the aim of better understanding the needs and priorities of organisations in the context of PSD2. The findings help to understand where businesses see the biggest opportunities and challenges for open banking. Our particular focus is around how businesses plan to utilise transactional data, which unlocks insight into the income and expenditure of consumers and small to medium businesses. First, we're going to quickly explore why transactional data is so valuable right now. The macro environment has impacted the effectiveness of credit models and scores. In Europe, broadly speaking, we are seeing a K-shaped recovery. There are those that are coming out of the pandemic better off and those that have been disadvantaged. Some industries have been shielded or face a fast recovery, whereas others will require further assistance in order to bounce back to pre-pandemic levels. This, of course, has a knock-on effect on credit and the financial health of customers. Essentially, 2 groups are created: the financially gained, the better off sectors, those consumers whose work is held up over lockdown. They have actually prospered and they sit on that upward slope of the K with pent-up demand for credit. They are the acquisition targets, the cross-sell and the upsell opportunities. At the same time, others, the disadvantaged, many small and medium-sized companies, those consumers working in heavily affected sectors such as hospitality, they have had it tough on the downward slope of the K. This is where affordability and cash flow assessment and ongoing monitoring is so important for lenders and businesses that offer credit facilities. Being able to accurately assess and detect the good opportunities as well as identifying the early warning signs for vulnerability will be very, very important over the coming months. The consequences of this is that the pandemic has created uncertainty around credit risk models. 1 in 3 are rebuilding their models from scratch. Payment holidays and government assistance may be masking customers' true financial circumstances. Businesses are always looking at new data sources to improve the decisions they make. And with an unprecedented external challenge like the pandemic, the interest in transactional data has accelerated. But regardless of the pandemic, transactional data from open banking can support businesses looking to strengthen their models and scorecards. delivering greater predictiveness of models by providing depth and recency of information. And as we'll look into shortly, open banking can also deliver wider customer experience benefits as well. So let's explore the research findings and the implications for businesses. It's clear that most of our respondents believe that open banking represents a big opportunity for their business, with a very small amount believing that it won't have a significant impact, and just 2% stating that they see it as a potential threat to their current business model. We asked businesses across our 5 markets to give a view on the level of PSD2 readiness in their market. Most believe they operate in a developing market with a need for better framework and regulatory guidance, with PSD2 driven by the market participants themselves. 33% believe their market is advanced but have multiple API standards. What is clear is that the PSD2 ecosystem is lacking standardization. We've seen this from many of the clients that we work with across EMEA. As a result, the standards have been adopted by businesses in different ways. For example, the data quality varies within the APIs. Some banks include the account holder name in the API, which supports the identity verification use case, but many are yet to include this despite recommendation from the European Banking Authority. The level of access has also been interpreted differently, with some banks allowing 24 months of historical transaction access, whereas others as little as 6 months. This has an impact on scores and models, with greater historical depth used to generate more accurate scores for originations. Some banks have even implemented multiple strong customer authentication checks that impacts the customer experience and slows the process down. The impact is that the journey completion rates take a hit. All of this brings inconsistency, with the regulators actively looking at ways to address this. In terms of improvements, we expect that the EBA will start to apply more pressure so that businesses will adapt and improve the quality of APIs, with potential sanctions enforced to ensure consistent application of the standards. With the number of open banking use cases increasing all the time, this tighter governance is a welcome positive step to ensure a common approach and maximum benefit for those involved. So 89% of respondents believe open banking represents a big opportunity, but where do they see the biggest opportunities? As you can see, there are clearly many opportunities identified by the research, but increased decision accuracy from better data comes out on top. In uncertain times, the ability to enrich analytical capability cannot be underestimated. It powers the all-important decisions that will fundamentally impact company growth. New data sources will be key to power more accurate and predictive decisions, which in turn fuels more profitable growth. Customer experience is also seen as a big opportunity. Customers now have increased expectations for fast and frictionless service. And open banking can support improved customer experience in a number of ways, which we'll discuss later. Let's step out and look at what transactional data is and the type of information it offers. We have some examples on the screen of the sort of data that can be extracted using PSD2 and then categorized into relevant buckets of transactions. There are some examples of the type of data you can access via open banking. The advantage of transactional data is that it provides deeper insight into a customer's financial behavior in real time, so lenders can better understand how much customers can afford to borrow and what they're able to repay. With transactional data integrated into analytical models and scorecards, businesses can assess affordability and cash flow more accurately with greater predictivity. This means greater confidence in the future predictions, the greater decision predictiveness, the greater commercial results for the business. Once categorized and analyzed, transactional data provides an understanding of a customer's behavior that can't be seen by traditional data. It allows you to observe a range of KPIs, affordability aggregates, cash flow KPIs, balance evolution, ratios, deltas, flags, and trended insights. This is then transformed into deeper level insight on an individual's finances and behavioral patterns, as well as being able to be used to develop a broader understanding of the behavior of a portfolio of customers. We can see changes to disposable income over time, balance insights such as time spent in overdraft, the average monthly income and sources of income, plus behavioural insight around expenditure commitments and other credit liability. For those businesses that lend to sole traders and small businesses, transactional data can improve decision accuracy by providing more indicators for operational cash flow, gross sales margin, or the debt service coverage ratio to understand if a company is expected to grow or decelerate. This transactional insight can be used in a number of ways. You can use the data to develop a standalone risk assessment score. A transaction-based credit risk score is based on the information gathered in the account statements. Things like cash flow estimates, balance evolution, the number and complexity of transactions, affordability aggregates based on the categorization. This alone has proven efficient for eligibility and pre-approvals, second chance for grey customers, and early warning purposes. It can produce a Gini uplift of up to 70% compared to some traditional scores. But transactional data can also be used with other data, macroeconomic data, bureau data, to deliver blended scores. By combining data sets, we can increase the Gini another 10 to 20%. This translates into greater accuracy of probability of default models and support your decision logic. Most respondents are focusing on originations as a priority, but other areas are also deemed important. Within originations, PSD2 can support income verification, affordability, credit scoring, underwriting automation, and fraud prevention. Businesses may look to open banking to address some or all of those processes. Then there's support for account opening, with digital identity and account verification made possible via consumer consent. As I mentioned earlier, there is more regulatory input needed in order to encourage common use of APIs for this sort of information. As businesses prioritize the use of open banking in the originations process, let me quickly show you how transactional insight can improve the very important cutoff measures for credit acceptance. We use a swap-in, swap-out method to highlight the value. Transactional data is great because it provides positive and negative indicators that generates insight into a customer's ability to afford credit. Positive indicators are things like regular bill payments and secure employer profile. These indicators are used to provide greater depth for the affordability assessment. The result is the ability to swap in marginal declines into accepts without increasing the risk appetite. You have more data variables to be able to deliver a confident yes for cases that otherwise would have been declined. This means more acceptance and a widening of new customer eligibility. At the same time, transactional data also reveals negative indicators that are used to deliver a higher predictivity of probability of default. For example, dependency on payday loans, or the high-level use of an overdraft classed as negative indicators. This provides more depth to swap marginal cases into declines that may otherwise have been accepted. This reduces delinquency and the bad debt rate. The result is more effective cut-off strategies that deliver greater profit and less debt. This is why many businesses are looking at transactional data to improve the accuracy of analytics. Businesses also stated faster customer onboarding as a key opportunity, and it's clear to see why. Digital customer experience is a key priority for most organizations. Open banking can simplify the application process for the customer. It can be done seamlessly via API. One experienced client has now automated data collection and has reduced the time taken to collect customer financial information by 80%. That time saving could be the difference between being able to acquire the customer or not. As open banking completion rates increase, this digital straight-through process will become more and more attractive to businesses. If businesses can demonstrate the value exchange to consumers, they'll become more confident about sharing their data. When you get the affordability assessment, open banking allows the customer to remain digital without a break in connection. This break would occur if the applicant is required to compile bank statement information manually and send it in or upload it. This slows the customer journey down and requires more effort from a back office point of view, where manual underwriting is necessary. Transactional data can be categorized and analyzed in seconds, creating more opportunity to automate decisioning, removing the need for manual underwriting for certain cases, and with a simpler customer journey, businesses can deliver a faster time to yes with less operational cost. A faster time to yes is also reliant on important identification checks. Traditional data relies heavily on application data to go with it. And the problem with application data is you don't know how true it is. Fraudsters like forging bank statements, and it's a common fraud type for onboarding. Transactional data helps reveal the full picture by providing additional identity verification by confirming account holder name and bank account number, as well as salary statements and employment verification to support the application process. And as the user must pass the bank's own authentication process to access the banking app, it provides a level of assurance on the identity. In the future, on the consumer side, we may be able to understand their employer industry, which will be very important in helping to understand the sector risk and how that impacts credit risk. With the pandemic, a very good example of why that information could be useful to businesses to factor into their assessments. We also asked our respondents what types of propositions they are focusing on for open banking. Not surprising, the product focus areas are those where a fast and effective onboarding process is critical: loans and credit cards. These products are available to consumers in an increasingly competitive and crowded online marketplace. So any advantage that individual businesses can unlock could have a big impact on commercial performance. But we can see other applications for car finance and the rise of buy now, pay later, where transactional data has already become a key ingredient to better qualify affordability and credit risk for instant lending. The findings also indicated that businesses are exploring the use of transactional data to support operations across the lifecycle into customer management and collections. New loan origination and monitoring guidelines require action to assess creditworthiness and affordability, not just at loan origination, but across the lifetime of a loan. As a result, businesses are already exploring how transactional insight can be better used to assess and monitor a customer's financial circumstances on an ongoing basis. To achieve the best possible customer experience, continuous affordability and cash flow monitoring will be critical, not only in identifying financial stress and pre-delinquency, but also to ensure adequate monitoring of the borrower's ability to repay as part of regulatory guidance. Therefore, using transactional data to inform early warning strategies and key risk indicators will help accurately monitor portfolios. Importantly, transactional data can uncover key data events that help identify signs of stress through an aggregated view. For example, a fall in income combined with a shift in spending to high priority items, new or unauthorized overdraft use, greater reliance on savings, or a recent take-up of a high-cost loan. This is extremely valuable when trying to understand affordability over time, so businesses can improve defenses to reduce delinquencies and bad debt by intervening more quickly to support customers showing signs of vulnerability. Here's an example of how transactional insight can be used to support early warning with a personalized action. In this example, I've used a business. It could be a consumer, but the business owner in this example has an active loan but provided ongoing consent to share transactional data. Data is extracted and categorized with machine learning and enriched with other data if necessary. This gives a detailed picture of current financial circumstances and any significant recent data events, such as a payday loan uptake. The data reveals a decline in forecasted operational cash flow, and an industry flag shows Benulos is a hospitality business which may have been impacted by the pandemic. A range of factors has highlighted that the business is showing signs of vulnerability. Insight is used to create a new payment plan based on the updated view of projected cash flow, offering lower payments over a longer term, which better matches what the company can afford to pay. The business owner is contacted to discuss the plan and agrees to the adjusted terms, and the situation is monitored closely to ensure the business can afford the adjusted payments, thus preventing the business from going into collections. In the early warning example I just gave, the business gave consent to ongoing access to their financial data. Our recent research commissioned with Forrester Consulting tested consumer attitudes to ongoing data sharing. And with more than half of consumers willing to allow ongoing monitoring of their financial information, businesses can look to use open banking to understand how customers' financial circumstances evolve over time, to improve the support provided throughout the life cycle. As you can see from the age breakdown, willingness to allow access sits at around 50% across the age groups, with an over-index in the two youngest age groups. Now let's look at investment plans. We asked respondents about barriers to investment. 58% of respondents cited slow customer adoption as a major consideration that could deter investment or implementation of open banking services. Adoption rates vary by market, but it is clear that we still have a way to go with regards to adoption. That said, it is increasing all the time. Cost is another barrier. There needs to be justification and ROI associated to investment. That said, we know already working with clients that the cost benefit can be significant in terms of operational savings, increased acceptance, and a reduction in the volume of delinquent accounts if used in early warning strategies. Keeping with consent for a minute, and again, this research is from our latest Forrester work. 43% of consumers are likely or very likely to allow financial services companies to access their financial information, such as via a banking app. This is encouraging for businesses that have or are looking to adopt open banking, but the real insight is that many more individuals could be persuaded with the right value exchange. Even those that were unlikely or very unlikely to allow access, many were open to changing their minds, providing they got something of value or were given certain reassurances in exchange. 38% would reconsider if it guaranteed a faster application process. 38% would change their mind if, in return, they could receive a better rate or if they had a better chance of being accepted. 37% would be likely or very likely to provide access if the company can convince them that the process is secure. Finally, 35% would reconsider if it made their life easier and more convenient by removing the need to send in physical paperwork, and 34% if it meant they wouldn't need to visit a branch. Businesses should think hard about the communication strategy as part of the implementation of a new process or journey for open banking, as the value might not be as clear to the customer as it is within your business. Providing a clear value statement up front might be enough to encourage participation and consent. For example, stating that by providing access to their financial information, a customer can experience a faster application process. We are seeing signs of growth, and actually the use of open banking has accelerated during the pandemic, driven by the convenience of a digital experience with physical branches and stores closed. Experian has seen a significant increase in the number of data sharing requests on its open banking platform. In the UK alone, the number of people choosing to share their data through open banking has tripled since the start of COVID-19 to 188 million data sharing requests in February 2021, up from 47 million in February 2020. As we know, the UK had a head start in open banking development, but other European markets are now showing an increase in adoption from consumers and businesses, and this is expected to continue to gather pace. So this growth is optimistic for the future as consumers get used to value exchange and providing access to their data. 91% of the businesses we surveyed have or plan to invest in open banking services. So concerns with consumer adoption isn't preventing investment. 42% have already made some level of investment, with 38% planning to invest in the next 12 months. The respondents see the opportunity and value that open banking can bring to their business. And finally, key takeaways for businesses. Coronavirus crisis demands a deeper look at customers' finances to understand true affordability, not just a customer's willingness to pay, but their actual daily, weekly, and monthly income, outgoings, commitments, and living costs. Trusted models have become less reliable. Businesses will utilize open banking and transactional data to develop more in-depth income and expenditure checks, to lend with greater confidence and less risk, while supporting ongoing affordability and cash flow monitoring. Businesses are prioritizing originations, but have broader opportunities in their sight, especially in customer management, where they can enhance early warning strategies. And businesses should create a communication strategy to explain the value of an open banking consent journey to their customers, to encourage adoption and increase conversion metrics. Communication really is key. A bit about Experian: we support clients with PSD2 connectivity, ID verification, categorization, and then the affordability and probability of default models and scores, where our experts help clients assess specific goals to deliver an optimal uplift in performance. We work with businesses to deploy the improved models into their decisioning workflows. For more information and access to the full report, please visit the Experian Academy website, where you can also find some of our latest thinking on open banking. We've looked at the complete research findings, but now I'm delighted that we're going to hear a perspective from a specific client to see what open banking means for their business.
For this one, okay, we see direct opportunities in at least 4 lines. Okay, on first line, of course, on the revenue line, okay, increasing sales. This is basically thanks to lower false positive rates when we decide on our credit checking processes automatically. Okay, this should help us, okay, to identify those good customers that currently we identify as bad payers. And for the cost lines, at least efficiencies in 3 concepts. Okay, first of all, bad debt provisions, okay, should decrease, and this is related with the other error, with lower false negative detection. We should decrease also operation cost. This should become something like a almost frictionless process for the customer. Okay, and we should solve decisions in let's say seconds. Okay, instead of this large back office checking information and documentation sent by email, things like that. Okay, and last but not least, also for our colleagues on the fraud prevention processes. Okay, with this enable us to do this kind of cross ID checking. Okay, of the identity of the customer or bank account owner. So yeah, I think that in terms of P&L, this should impact in at least these 4 lines. Okay, and on the other hand, okay, this is a digital native process, so this should also impact directly on. It's a very straightforward journey and a scalable process. So as we move to a more and more digital paradigm, this should also impact there. So yeah. I think that in the overall, okay, open banking has this rare feature of becoming or a potential game changer, at least for credit managers. Okay, but not only. Yeah, from the customer perspective, I would like to highlight here 4 things. Okay, first of all, this should be a much easier way for the customer to share solvency information with us. Okay, currently we have credit checking process as usual, sending these emails with copies or scan information. Okay, and this is a rather straightforward process. He's actively involved, so it should be far easier for him. Faster for him and for the company in terms of we might be solving credit operation seconds instead of days for those more, let's say, not clear operations. So this is second benefit. The third one will be we will have more complete and accurate information, and well, this is crucial in terms of reducing those false positive and negative rate. So this will be nice for the customer, I'm sure for that. Okay, since sometimes you have to give explanations of why this was not accepted and this and that, and well, yeah, this is the information we have. You share it with us, so no problem with that. And in that sense, in that very sense, and I would like to make a short stop here, but this is a much more transparent process for the customers, at least in the Spanish market, where we don't have, let's say, positive information. Currently, we only work with our internal information, can be either false, can be positive or negative. Okay, and then we have credit bureaus with negative information, but for the first time in the Spanish market, okay, this will be the customer sharing with us his information. So this is, I think, from my perspective, this is a much more transparent process. And well, from the data gathering perspective, okay, this is no fear, no wizardry. What are you doing with this machine? Okay, we are just working with the information you are sharing with us. So this should be, these 4 things I think are really nice from the customer's perspective. We have started with the onboarding, okay, of customers at the very beginning, but probably we will be doing this also from the first stages. Okay, we will extend this for upselling in the portfolio. Okay, of, let's say, more risky products. We have, in Vodafone Spain, we have, and this is common practice in Spain, but we do this internally in Vodafone. Okay, we have those finance products, let's say handsets. Okay, we sell them on credit basis. So probably we will not only use it for the onboarding, but also for upsells within the portfolio. Okay, and from the let's say a more CBM or customer value management perspective, this will be a second step, but just to do one step at a time. Okay, we will start, let's say, gathering due to GDPR things. Okay, but we will start, let's say, saving a bit of information. Okay, to see, let's say, in the incoming months. Okay, if there is, let's say, definite value that could be also useful for, you know, marketing purposes and to prepare offers or campaigns, things like that. So somehow we had to refrain them from the very beginning to go live with the whole set, okay, and say, okay, let's start with onboarding, okay, and then we will extend once we see how this works, okay. But yeah, most likely we will be shifting also to portfolio operations, okay. This, as I said, this is very different from anything we had done previously. Okay, so far we are working on inference. I think that you might be not a good payer. Okay, and now it is all about, okay, this is where you are going to have the direct debit, and you do have the money or you don't have the money. So yeah, it's far easier also for the people of campaigns of, okay, let's offer him not a super premium brand, let's say, but this other one that makes it good could be enough. So yeah, improving conversion rates on the portfolio, I think it's a direct second step. Three things here, okay. We will have, as I said, more accurate and first-hand information, okay. This is the real data, okay. It is not just that I'm guessing or inferring, okay. What is going to happen? It is just that I'm working with reality of the last, let's say, some months, recent reality with the customers, and this should, let's say, lower the inference burden, okay. Currently, there is a heavy load on big data models and machine learning things, okay. But what I think that it's really a differential of open banking is that you work directly with the information, and you can work with, you know, the real thing, let's say. The second one is from a management perspective, okay. From the moment that you have a very informed process, okay, you have better information to decide, the decision-making process is going to be easier. So this will make it simpler. Okay, I hope this will help also to solve these scenarios where, okay, this information or this operation was rejected. Can you give more details, given that this customer, that other one? Okay, this will be all about, okay, we were deciding on explicitly on the information that he actively gave to us. So I think that that's very nice. And on the third part, okay, and of course this will allow us to gain insights on customer preferences, okay, and this should also be crucial, okay, to design a, let's say, more targeted portfolio for the customer, okay, of services or products. We are extending as telco companies to some new, let's say, things. And well, I think that being able to profile correctly the customer, it's a good thing for both parts, for him and for us as Vodafone. After the implementation remains to be seen. Okay, we are currently work in progress. Again, truly willing to see it soon. I think in the very short term. Okay, but yeah, already and before, and this is something rather unique from my experience, is that it has already captured the interest of all stakeholders involved in the project, and this means people from marketing, people from sales, from even IT, okay, and the information and the way they, how easy it is to integrate with this product, okay. And I think this is, from the very beginning, this is very special in terms of, it is not that easy that from credit risk, which is my management, which is my position, okay, to offer a product to the stakeholders and find them all aligned around the objective. And I think that open banking, it's a very easy to explain and has this unique feature. Okay, well, so this year, being prepared for an always more demanding future, particularly on our sector. Telco sector in Spain is most competitive sector, okay? And well, I think that if we manage to have open banking as soon as possible, yeah, this will prepare us, okay, to extend our portfolio of services. And on the other hand, and this will provide us with a competitive advantage, let's say, while the other competitors put it in practice, okay. But well, in the overall, okay, and as we like to say internally, and when I had to explain this to my seniors, I used to say that probably, okay, open banking is the biggest disruption we have had since the introduction of modern credit checking processes, okay. That worked, as I said, on internal and external information. And I think this is a very unique opportunity to see it working. And yeah, I'm hoping for the best and not being too much optimistic. So yeah, I think this is it.
Fascinating to hear directly from a client there, really interesting. Now we're going to head straight into the roundtable discussion, where we'll discuss the impacts of open banking across different European markets.
Hello and welcome to our roundtable discussion, where I'm delighted to be joined by some of Experian's regional open banking experts. This conversation is to explore and provide some insight into how open banking is impacting different markets across Europe. So let's get started. Our open banking research shows that clients are looking at several different use cases across the customer lifecycle. So to start, I'd like each of you to briefly highlight the top use cases you're seeing in your market. Christina, if you could start us off, please.
Hi, Paul, and hello, everyone. Thank you for the question and for having me here. I will answer this question deriving from the experience I have in France, Italy, and Eastern Europe, which are the territories I'm active in. Payment Service Directive 2 and more widely open banking started with simpler applications, such as aggregation of accounts and personal finance managers, both use cases launched by several challenger and incumbent banks, but also by pure account information service providers, either independent or belonging to a banking group. But the use case with the strongest development now is that of credit. It is the instant lending use case with initiatives like the one illustrated by UniCredit, which is hugely innovative because it's not only about digital customer onboarding and instant decisioning. In the case of UniCredit, it is instant decisioning with instant disbursement. In Italy, for example, the value of open banking that is going to be generated between 2020 and 2025 on the domestic banking system is around 1 billion euros, according to Accenture, and about half of it comes from credit-related use cases.
Thanks, Christina. Very interesting. So you mentioned instant lending there. What sort of client value have you seen in this space?
The value, Paul, comes from different angles. From a data coverage perspective, you increase the ability to assess people and businesses less represented in credit bureaus. And I'm referring to Generation X and Z and to young companies, for example. So there you have hands-on financial inclusion. Let me be, though, clear about one thing. The open banking data will not substitute the credit bureaus. These two data sources complement each other. The credit bureaus help understand the credit behaviors, while open banking reveals insights about income and expenditure. So you check salary or disposable income, hugely important for affordability assessment and responsible lending. So you can calculate cash flow on small companies that do not have the requirements to deposit financial statements. In that way, you can lend to a wider addressable market without compromising on your risk objectives. So our experience shows that you can lend from 20 to 50% more of your target population thanks to open banking. And you can do that real time without hassle of paperwork, which reduces, of course, operational costs and improves customer experience. It basically pretty much makes instant lending possible for both consumers and even more so, small and medium enterprises.
Okay, thank you. Increased eligibility, clearly a big opportunity. Veronica.
Thanks, Paul. The most prevalent use cases we see in the Dutch market are the affordability calculations at originations. In addition to that, we see several use cases related to risk modeling. Think about including transactional insights into credit risk models and early warning models. And next to that, some of our clients are using transactional insights in the collection process to establish fair promises to pay.
Okay, so affordability and originations, which we know is a priority, but also collections. Thank you. And Henrik?
Yes, if I look at it from a Nordic context where I navigate, I think some of the elements Veronica mentioned around compliant affordability calculations is one of the top use cases we see at the moment, really to create a sufficient insight into the client's affordability and economy before granting a loan. This is very much top of mind and the dialogue we have with the client base at the moment where transactional data can clearly complement and support that challenge. Time to yes, better and faster customer onboarding by leveraging advanced analytics and automation is another key use case. The data itself carries relevance, but even more important, utilize the data and drive automation rather than having the consumer providing manual input. At the end of the day, this creates a faster and better customer experience.
Okay. And would you say that those areas are the biggest investment drivers at the moment in the Nordics?
Yeah, I would say so, Paul. It clearly surrounds affordability, But I would reinforce here that the focus is indeed also moving towards the value-added services at this point. To elaborate a little bit, recent guidance from the Danish FSA sets very new requirements for affordability calculations, which means using statistical affordability is really not sufficient anymore. Hence, leveraging live transactional data to document actual affordability is really key and in focus at the moment. But further to that, value-added services is a key area. One thing is data, but enhancing scorecard performance will extract even more value from this data source and could, for instance, provide a basis for saying yes to more clients based on stronger and more reliable data foundations. And furthermore, taking this into the next level and leverage strong performing scorecards into decisioning and automation will benefit the client and also the consumer, hence again, create an overall better customer experience.
Thanks, Henrik. Let me come to you now, Dominic.
Thanks, Paul. Yeah, I think, customer lifecycle is one way of looking at things when it comes to open banking with the chance of using alternative data. In my opinion, the industry view is another dimension that we should go down and explore a little bit further on. I think in traditional banking, I'm following my peers here. It seems like a seamless customer experience across the origination process remains the key use case in the industry at the moment. Almost all of our clients are asking themselves, how can I create what they call the tube experience, in the sense of how can I enable a customer to get in at tube station A, take out a loan, and when they get out of the tube at tube station B, they already have the funds in their accounts. So this is probably the most prevalent use cases when it comes to DACH and the traditional banking industries. And if you combine that with the available digital identification mechanisms, we really have a use case here. On the other hand, if we look at different industries like e-commerce or the telecommunication industries, we see use cases coming up like second chance, or to a lesser extent, even identification light. So for merchants in particular, it makes sense to offer second chance purchase processes whenever they feel like traditional data still leaves some doubts about the creditworthiness of the consumer. Please keep in mind, though, that Germany remains an open invoice or a BNPL market, which puts quite some risk on the merchant. The combination of traditional and alternative data can definitely help close that gap, especially when it comes to the younger part of the population that don't have much of a credit history, right?
Yeah, no, definitely. And you mentioned their second chance, which I know it's an important use case. What results have you seen for businesses using open banking for second chance?
Well, I think the best use case that we had was when we were challenged by one of our telco clients with the task to find a way for them to offer what they call zero rejection, essentially meaning that they wanted to make a suitable offer for each and every one customer coming through their digital channels. And of course, they didn't want to take on more bad debt, right? So that's the key challenge. So what we did is develop a risk-based deposit model for all those potential clients that would normally be rejected. For that risk model, we obviously used open banking data in particular, as traditional bureau data obviously wasn't the answer. And as a key result, we could allow our client to convert about 2.25 million per annum additional revenues at the same risk level without offering any deposit at all. And other potential clients have received risk-based deposit offers. So, zero rejection, Paul, this is what we were able to do. Challenge accepted and solved, right?
Yeah, exactly. Well, that's a really, really good example. Thank you. And finally, Loretta, let me come to you.
Thank you, Paul. Yeah, in Spain, we see the open banking is helping the entities to offer a second chance, especially in those segments usually penalized by the traditional data. The transactional data is especially important in those subpopulations where the available traditional information is limited, as for example, the self-employees, at least in Spain, given that it's usual that the entities tend to be more conservative in their risk policies on those subpopulations where the information is lower. That's why the open banking brings a great opportunity to offer a second chance in those riskier segments. Our estimation showed, in average, a 10% improvement in acceptance rates by the introduction of the transactional information in the origination process. In addition, given the huge predictive value of this information, the risk process is more discriminant, observing significant reduction in risk costs.
Well, thank you, Loretta. The next question is one we often get from clients at the beginning of open banking conversations, and it's related to bank accounts. We know on average consumers and businesses have more than one bank account. So I want to ask, what challenge does multiple accounts pose to businesses when they're looking to ensure the most accurate affordability assessments? Christina, I'm going to come to you.
What we have observed so far in our open banking projects in Italy is that each consumer has on average 1.6 accounts, and 1/3 of them use different banks. And companies have on average 2.7 accounts. Therefore, it is very important to establish whether we are going to make credit worthiness assessments on the main account or on a marginal account of a consumer or a business. So we created an account significance score that we recommend to apply before the risk assessment. This score looks at a type of incoming transactions, like, for example, are they salaries or just 100 euros coming, every now and then from another bank account? The account significance score looks also at the type of expenditure. Is it for essential living with grocery spending and utility bills and so on, or just e-commerce transactions? So in the case of a multi-banking customer, clearly the ideal situation is to aggregate all of the accounts. For a small business, it's actually essential to have all accounts to calculate correctly the cash flow. And if we are not able to aggregate for some reason all the accounts of a multi-bank customer, then at least we know the representativeness of the account that we analyze.
Okay, thank you. Loretta, what's your view on this one?
Yeah, I'm going now to focus on another angle about this important topic, because I think that this is one of the most relevant topics to be considered in the open banking solutions. Here, the challenge is not only how to exploit the data that comes from different current accounts in an appropriate way, but also how we could access to all the accounts of the users, consumers or businesses, given that open banking solutions are based on the user's consent. Therefore, it's very important to stimulate the user to provide as much accounts as possible through a friendly customer journey. Reinforcing the idea to get as much information as possible from the current accounts in the customer journey is crucial, and at Experian, we always advise clients to establish some basic rules to ensure the success of the call. That is especially key in the SME segment, given they work with several banking entities. In general, the entities are improving their onboarding process to encourage the users to provide all the accounts information by including clear messages in the widgets. Usually, the entities are offering the open banking as an alternative to avoid the physical documentation and streamline the origination process. Furthermore, once the user has provided all the information data from all the accounts, it's key to have a robust solution able to aggregate all the information and apply an effective categorization that provides holistic credit view, considering multiple challenges when you are exploiting those data.
Okay, thank you. So you both mentioned there SME 2.7 accounts. So staying with SME lending for a second, what opportunities do you think open banking can bring for SME lenders specifically? And Dominic, I'd like to come to you for this one, please.
That's a good one, Paul. I think for more than 20 years, assessing SMEs has been the predominant challenge for credit risk managers in lending, leasing, or in all sorts of disciplines. It's like the holy grail that everyone was searching for, right? And like in Germany, 1 out of 4 3 million German companies publish relevant figures. That leaves more than 3 million SMEs with a scarcity of available data. That remains the big challenge, obviously. And to be very honest, open banking probably is the one initiative that helps solving that challenge, given that the SME is typically highly related to the person behind the actual company. So since the assessment of an SME or B2B in general is much more complex than the assessment of a consumer, lenders can now profit from the fact that open banking tech and data provides the opportunity to add another source of data for the overall assessment, right? And instead of just looking at B2B bureau data, open banking provides the opportunity to continuously monitor and help SMEs depending on what their financial situation really looks like. Analytics could even solve use cases like cash flow management, limit management. I mean, if you start thinking about it, since the data access to open banking tech provided is rich, accurate, and almost real time. So lots of opportunities there. And that opens up more opportunities. And I think certainly we as Experian are in a good position to help with that.
Thank you, Dominic. Yeah, and I'm going to come back to you, Loretta, because I know SME lending is potentially a big growth area in Spain as well.
Yeah, thank you, Paul. Yeah, well, the adoption on the SME segment has been slower than for consumers. However, given the impact of the pandemic and consequently the need to access financing by SMEs, the banking institutions are prioritizing the integration of the open banking solution in their processes. In Spain, more than 95% of the companies are SMEs, and there are not up-to-date financial statements for a significant part of them. As Dominic said before, is the same case as in Germany. That's why the open banking solution is especially useful in this segment. In the current economic crisis, most of the financial institutions were struggling to understand what is the impact that COVID has had on the company in recent months. To this point, the transactional data offers the possibility of analyzing the evolution of the company in a pre-crisis and post-crisis scenario and obtain a representative cash flow on the financial situation of the company. Furthermore, for existing clients, it represents a clear improvement in the efficiency of the credit risk analysis processes, which can also be applied to the world of debt collection. For new clients, there is a clear opportunity to increase approval rates, expanding the business and boosting the market.
Very interesting. Thank you, Loretto. I'm going to come on to customer adoption. As we know, it's a big topic, a very important topic for clients. Our research shows that customer adoption is cited as the biggest barrier for businesses looking to invest in open banking. Christina, what would you say to clients who have concerns around adoption?
Yeah, indeed, Paul, one of the biggest concerns with regards to the open banking journey is the explicit consent that the end client, the so-called PSU, needs to give in order for the sourcing of data from the payment account to begin. There is different research performed on consumers that show an ever-increasing willingness to share the payment and bank account data, which is not surprising, given that it is 2 years that we have Payment Service Directive 2 enforced in the European Union. But ultimately, it is about value exchange. Why would any of us give access to such sensitive data? We would give access to such sensitive data in order to obtain something that we really want, like a loan, a service, a good, much quicker, even instantly, or to ease our efforts. So, for example, instead of going back home to pick up pay slips or download the bank statements, I'm just giving access to my account with few clicks for income verification while I am in the shop or while I am in my digital journey. Our data from the field shows that more than 80% of the customers in the funnel does give access to data, because in that journey, the customer is getting huge value back, therefore is, wholeheartedly engaging in the value exchange.
And I think that's a very important message, very encouraging for clients, 80% allowing access to the data. But of course, value exchange is really important. Thank you. And as we come to the end of the discussion, I'd like to finish with some final thoughts, if I may. What does open banking mean to you? Veronica, go ahead.
Well, this is a great question, Paul. Well, aside from the benefits for a consumer making credit decisions faster, it is a great opportunity in the market. Clients are beginning to explore the possibilities, and Experian is greatly positioned to bring this to the Dutch market. The endless possibilities that open banking can bring is really exciting. This new source of data combined with other data sources and analytics will give us many opportunities to create more powerful insights. And by introducing transactional insights on the decisioning front, we can share a digital experience in the originations phase and a more tailored approach in the customer management, credit risk modeling, and in collections. So I am super excited to see how open banking will evolve in the Netherlands in the coming period.
Thank you. And Dom.
I will just build on what Veronica said, because I feel like it's exciting times, right? Open banking provides access to data that just wasn't available before, and it puts control in the hands of the consumer as explicit consent and action is required to let a third party access that rich source of data. So that's a differentiator right there. It's digital, it's fast, and from an analytics point of view, it's exciting to serve existing use cases, but also to explore further use cases that maybe we're not even aware of today. And it also closes a gap in the digital onboarding process, and combined with digital identification methods, it fights what we call the identification monopoly that we traditionally had, at least in Germany. And from my personal view, I think the combination of open banking data and traditional bureau data will help make better decisions faster in many different environments. And I think Experian is in really good shape to help our clients embrace that new world that, if we're being honest, it's not so new anymore, right?
Thank you, Dominic. And Christina, what does it mean to you?
Yeah, open banking and transactional data are huge opportunities because they allow you to complete the picture of any customer, both individual and company, with immediate, reactive, and insightful data about their financial status, habits, preferences, and behaviors. So looking forward, I expect a generalized adoption of open banking models in instant lending, but also in early warning, in client segmentation, trigger marketing, and propensity analysis. There are no more boundaries between marketing and risk data. And I believe transactional data is the perfect trade union between these two words. So the message with which I want to leave you is that we have the tools and we have the know-how. The open banking opportunity is real and is now.
Very much so. Thank you. Henrik.
Yeah, thanks, Paul. My message is really short. In simple terms, transaction insights provides unique ability to strengthen KYC, know your customer, and the opportunity is really evolving with high pace.
Thank you, Henrik. And Loretto, finally.
Okay. Yeah, well, in countries like Spain, where there are only bureaus with negative information, open banking has clearly been a before and an after. With the arrival of the PSD2 regulation in 2019, a new reality has been created where customer data no longer belongs only to the banks, but to the customers themselves. And now it is they who can decide to give their express consent for other companies to personalize their products or meet their needs. We see a great and excited momentum where there are benefits for both the customer who owns the data, and in turn, it's a benefit for the entities knowing better their customers, decreasing the operating cost, improving the fraud prevention rates, improving the acceptance rates, and reducing the risk cost. So I firmly believe the adoption will advance rapidly in the coming years through all types of sectors: banking, consumer finance, telcos, autos, insurance, among others.
Thank you, Loretto. Really excited. We can see the excitement in the virtual room. Thanks, everybody, for your time. And I'm sure all of you look forward to working with our clients to help them fulfill their open banking potential. That concludes our event. Please get in touch with your local Experian representative if you want more information, and go to experianacademy.com for more open banking insight. Bye for now.